The purpose of this tutorial is to give basic users an understanding of how it works and how to make changes, while at the same time introducing some of the advanced sections for those with more complex requirements that are already familiar with Excel. So first, if you have any questions, you can refer to the ProAI guide with some additional support. There's also, if you're interested in transposing the changes that you make in this model to your business plan using the financial tables, that's in the ProAI guide. There's a specific section in there and a specific video on that I recommend you watch if that's something that you're interested in. And if you need additional help, then we have live chat representatives in your ProAI dashboard, as well as you can book some time with an expert if you want a human professional to be able to review this with you. So just first of all, let's get quickly into this. So the first tab is the most important. And something to understand about this, by the time you download this financial model, ProAI will have generated a lot of these assumptions for you. And the way that it generates it is it understands everything about your business that you've shared with it, everything about its business that it's uncovered through its conversations with you, through its some of our proprietary data that we're using to feed ProAI, as well as some other tools that we've equipped it with to be able to help better conduct financial assumptions, forecasts. So the way that what it has done initially is in the capital structure assumptions, it's provided a rough outline as if the business were being started or expanded upon. So the way that what it has generated is what it thinks it costs to be able to start or expand a business depending on where you're at this time. And right now it's primarily oriented towards early stage companies. But we have a new module coming out soon that's for companies with existing financials that we can utilize those and help forecasting based off of that. That's, I think, going to be very relevant for the more advanced users. But right now, the capital forecasts are focused on the amount needed to start the company. And if you want to adjust that, you can do so here. And what it will do is it will repopulate everything for you. So you can change these categories as well if you need to, but what it's done is it's tried to simplify it as much as possible, because whatever category we have here is actually a consolidation of a bunch of smaller categories. So for example, if you have product development and you have $1 million allocated to that, well, that's actually perhaps 70 different items or 10 different items that we just haven't included in here. And if you're an advanced user, you can create a new tab for that and you can list all those out and then sum them. But for the purposes of financial reporting, it's generally a good idea to provide a more high-level overview, but then be prepared for all of the assumptions that are supporting that. So if you want to change that, you can go ahead and do those in those cells. For the revenue assumptions, the way that ProAI has generated the revenue assumptions is it's taken the average of all the products that you have and the average of the price and the cost of goods sold to try and be able to forecast that based off of what it knows about you. So rather than doing an individual forecast of each unit and putting that into the model, because again, that's quite complicated for financial reporting purposes, what it's done is it's taken the average of them and it's done that analysis on the back end. So thinking through how many units you're selling and what conditions happen in order to sell those units is something that it does, but it doesn't put it down because, again, it's quite overwhelming for someone that's doing advanced financial analysis, but certainly one can back into them. When it comes to the subscription model, if your business has a subscription model, then the way that works is, again, is consolidated average. So if you have 3 subscription plans, it consolidates them, and it kind of takes the average of what the cost is and what the assumption is around your churn rates and things of that nature. If you already have a subscription business, then this is something you're going to be really familiar with. But if you don't, then I would just ignore that section. When it comes to the cost assumptions, that's the same logic is that rather than providing a comprehensive breakdown of every expense and then forecasting that, for an early stage company, it's better to do it at a high level, because you can be a little bit more accurate by being at a more abstract level. So as an example, if I'm thinking of a number between 1 and 100, the probability that you can guess that number being between 1 and 50 is much higher than being able to guess what that exact number is. So it's the same kind of logic. And what we've done is we've thought through all of the assumptions and the micro assumptions, but we've consolidated the categories. Again, for simplicity and also for an attempt at more accurate results at a high level. However, if you're an advanced user, again, there are certain sections in the financial model where you can input the detailed cost assumptions and then add them up and then update this sheet, which will update everything. So an important thing to understand here is that this is your control board. This is where all the assumptions that you generate and you think through are going to populate the model, not other tabs and not the statements directly. Everything goes in the yellow boxes. So now the other expenses that you may have, again, you can consolidate them and put them in here. So for advanced users, one thing that I would like to point out is, again, very shortly we're going to be releasing the ability to conduct financial forecasting based off of existing financial statements. So that will allow us to calculate a lot of these ratios, these advanced financial ratios that are being used to conduct a forecast by what's already in your accounting system or already in your financial statements. But for the time being, particularly if you're either an advanced user or an existing company, this is going to be more relevant to you. So things like, what is your cycle of cash flows? What is your depreciation rate on your equipment? What is, if you have debt, what are the mechanics and terms behind your debt? So those types of advanced things you're already going to be familiar with. So if you're unfamiliar with what's in here, I would just ignore it. If you are an advanced user, then this tutorial might not even be for you, because you'll be able to quickly flip through this model and understand everything that needs to be done. But the idea is that it's a core framework for advanced users. So if you need to layer in certain things or add certain things, you can tie it back into this core set of assumption pages that will then be able to be adjusted accordingly. So whatever changes you make in those yellow boxes, they're going to be reflected in these statements. And again, to be able to transpose these statements, I would refer you to the ProAI guide. There's a section in there about specifically being able to take these tables and then putting them into the Word document or the Google document. It's quite easy to do, but it's not something that is easily automated without causing a lot of formatting errors for you. So that's why that's not a feature. But one thing you'll be able to do is flip between both of these tabs to understand what the impact is on certain assumptions of your profit and loss statement. And for advanced users, this section is going to be really briefly covering some of the details here. So the way that this works is it is providing a high-level forecast of the underlying assumptions to arrive at the details of the revenue forecast. So if you think about a simple subscription growth rate, or simple amount of products and services, then that needs to be calculated and computed. So we have in here where if you want to be able to override that and provide more specific assumptions, such as a growth rate that changes annually, then you'd be able to do that here. And the same thing if you want to be able to adjust some of the more specific annual growth rates of your subscription numbers, again, that would be able to be done here. So the capital structure, as I already mentioned, is something that is able to be passed through into the core model, and that is what's going to be populated here. You really don't need to be able to utilize this. It's really going to be related to what's generated on the yellow tab. However, if you do want to incorporate some more advanced functionality, you could do so on this and then feed it into the assumptions on the yellow tab by adding as many items as you'd like for your capital structure. The depreciation schedule is pretty straightforward, so if you're familiar with that, then not a lot that needs to be done there. If you'd like to be able to modify that, then you can do so up there, and it will allow you to go into the particulars if you do need to. The same thing with working capital, so it works the same way as a capital structure. It feeds in to the assumptions page, and if you have any specific things that you want to add and consolidate, then you can do that here. The direct costs are much more detailed breakdown for your cost of goods sold. So if you really have a complex complexity of the cost of goods sold, and you really want to be able to break that down and think about the mechanics of that, then you can do that here. So if you have a lot of, as I mentioned before, if you have a lot of other expenses that aren't included and have already been kind of consolidated, then that's what this section would be for. So you can go in and you can add as many expenses as you would like, and if you want to change them on a year-by-year basis, right, so if it's not a consistent growth rate for every expense category, then you can modify that, and you'll be able to make adjustments for that. Finally, the depreciation and the debt amortization table. So if you are taking on debt, then ProAI will create a baseline set of assumptions around that debt so that we can create a starting point for you to be able to have the debt payment schedule incorporated into your forecasts. However, if you would like to modify that, for example, if you have a term sheet from a lender or you're going after a specific type of capital such as a line of credit, then you might need to be able to change these assumptions a little bit to better forecast that. So if you have any questions, as I mentioned, you can refer to the ProAI guide. Our live chat is available on the website. You can also email us at proai@business-plans.com. And if you need more advanced assistance, we have a team of experts that you can book that are in our network that can potentially schedule some time with you to answer some of the more advanced questions you have.